Good afternoon. You're watching Businessworld Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Tuesday. The PSEI still on the recovery path today as it extended its rally for a second day. Shares today up 1.8%, making it a 4.6% gain since Monday. That brought stocks to close at 6,560. This comes as unemployment came in steady for the month of June at 7.7% or around 3.76 million jobless Filipinos, slightly up from 3.73 million back in May. Now, labor force participation rate at 65% with underemployment at 14.2% compared to 12.3% in the previous month. We'll discuss more of that later and how the reimposition of ECQ might affect those figures moving forward. We have on the show later RestoPH head Eric Teng. But back to the bourse, it's the financials and the property counters which led gains after a number of components registered better earnings for the April to June period. Take a look at this chart right here. You have for one SM Prime, today's second best performer after second quarter profit, more than doubled SM Prime in the green by 4.6% to 33 pesos and 80 centavos a piece. BDO likewise making gains after recovering from a loss last year. The lender is up 4.23% to 111 pesos a share. ICTSI also rose 3.8% over projections that the port operator will also yield strong second quarter figures. Andre Soriano of AP Security said expectations come on the back of higher yield per container, new services coming online, and the recovery in trade. At least for today, ICTSI at 167 pesos and 10 centavos a share. Bloomberry also in the positive territory here after it posted a narrower net loss in the second quarter at 1.2 billion pesos. That stops the three-day bleeding for the casino operator, which rose 2.19% to 5 pesos and 60 a piece. And while we're on earnings, might as well take a look at Ayala Land. The property developer churned a net income of 3.3 billion pesos from April to June, way above from the plunge that it saw last year when attributable net income plunged to 197 million pesos due to mall closures. Current figures also 16.6 times higher year on year. Revenue also higher at 24.3 billion pesos. That pushed first half revenue to 49 billion pesos, while net income for the first sem is already at 6 billion pesos. The developer attributes the improvement to residential demand being resilient as well as construction progress. Ayala Land is earmarking 100 billion pesos worth of residential launches for the year, with 14 projects already launched in the first half. Commercial segment, though, still not on good footing here, with leasing revenue down by 26% to 9.5 billion pesos compared to a slight uptick in their office leasing to 4.8 billion pesos despite the strong outing for the period. You can see right here, Ayala Land retreated on Tuesday, down 0.6% to 33 pesos and 80 centavos a piece. Here are other headlines we're keeping our eyes on. Meralco is suspending disconnection activities for households in areas under ECQ and MECQ. This means unpaid power dues in Laguna from August 1 to 15 and in the capital region from August 6 to 20 won't result in disconnection. The Philippine Star reports that the power distributor took into consideration customers affected by the hard lockdown imposed due to a surge in cases. For customers staying in less restrictive lockdowns, disconnection activities will continue as normal. Customers who have the capacity to settle their bills on time are encouraged to do so. Unemployment steadies in June at 7.7% or 3.7 million jobless Filipinos, similar to the level in May. Economic managers see this as the limit to job creation without major relaxations in restrictions. Given tighter curbs this month, the economic team expects a temporary setback in employment outcomes. Still, the team acknowledged the importance of stricter lockdowns to prevent the further spread of COVID-19. The economic group says the government is expected to accelerate vaccination during this period paving the way for the inoculation of 70 million Filipinos by year end. Now, the Philippine Chamber of Commerce and Industry also sees definite job hits following the re-implementation of ECQ in Metro Manila. PCCI Acting President Edgardo Lacson cites Labor Department estimates of more than 100,000 jobs lost in the next 2 weeks. Metro Manila cities, meanwhile, are preparing for the start of ECQ on Friday. The MMDA says the truck ban and number coding schemes have been lifted to allow unhampered movement of goods. Preparations also include coordinating for the final schedule of distribution of cash assistance. The government has directed all executive department agencies to identify savings that will be used to fund the cash aid program during the 2-week ECQ. Okay, we're going to go for a quick break right now. We're going to give you more business stories when we come back. Business World Live will return. And we're still watching Business World Live here on One News. I'm Jes Delos Santos. While unemployment came in steady for the month of June at 7.7%, the month of August might yield worse numbers as ECQ takes effect in Metro Manila for 2 weeks, with the food and restaurant sector taking another heavy beating. Let's find out how they are taking this. We have on the program RestoPH President Eric Teng. Good afternoon, Sir Eric.
Good afternoon.
Okay, let's go back to last week when you had less than 24 hours to prepare for store closures as GCQ with heightened restrictions took effect. What did your members think about that move and how did you take it?
It was quite upsetting because normally at least we were given 24 to 48 hours. This was the first time that in the morning around 8 a.m., Berhera was saying that there's nothing to be afraid of. And yet at 10 a.m., we had Secretary Roque saying that no dining will be allowed the next day. So it's alarming for us. We wonder why it's such an abrupt announcement for us. We would have been very happy to support the lockdown period in the interest of public safety. But I hope we were given enough time and consideration, maybe give us the weekend and announce that the closure would be for Monday. That would have been easier for us to manage. But as it stands, it caused a lot more damage than what was necessary.
Mm-hmm. Now, Sir Eric, also, what's interesting here is previously, of course, there has been much of a leeway for alfresco dining, but that is going to change at least for the reimposition of the ECQ. I mean, a lot of restaurants have already adjusted prior to ECQ just to stay in business. I mean, operating outdoor facilities here. How does this put in limbo the operations of your members? And are you still hoping for a bit of a leeway here for outdoor dining?
Well, we try to work with our government in terms of working out a plan for Q3. So we're looking at there's vaccination schedules coming along fine, and therefore we might hit 50% around September. So a lot of our members are already beginning to reinvest in their businesses, rehiring people back, reopening their restaurants. And then we had a week of bad weather, heavy rains and floods in some areas. So while they were gearing up to open, they were already saddled with that 1 or 2 weeks of bad weather. And then they were just trying to catch up for this weekend. And then, like I said, the sudden closure. So this takes a lot of confidence out of people who are willing to invest. They might just wait out till later in the year or even next year before they get back into the game.
Mm-hmm. Now, question is, of course, this means that a lot of your members would have to subsist or survive on delivery and online services alone. Can you remember surviving these things? And over the past year, how much of the revenue was sourced from delivery services?
For some restaurants, for example, pizza or other limited service restaurants, it can be anywhere from 50 to 60%. But in my own restaurant, it's only a meager 10 to 20% because we are more of an experienced restaurant, experience-oriented restaurant. So not all restaurants have been able to adapt or can adapt to delivery business model. But it's still better than the previous ECQ when we couldn't even do any delivery business. So I suppose we have to be grateful that the substantial portion of our RestoPH membership are already vaccinated. There are people who are already ready to work, and they're just hoping that the delivery business will be able to compensate a little bit. And I've been telling our members it's just for the next 2 weeks. We're hoping it doesn't get extended. Maybe if we all work together, the numbers will start to stabilize and even go down. But we understand the severity of the situation. We understand the urgency of the need for a lockdown at this stage.
Sir Eric, should this extend beyond 2 weeks? What's the possible repercussion here for the sector?
Well, obviously, it's going to be pain on a bleeding wound, on a decomposing limb. So it's really something that's impossible for us to sustain for a few months, let alone for over a year. And we were hoping that the vaccination drive, which in our assessment is going along fine for the second quarter, we were already thinking of the third quarter as our reset stage to prepare for the fourth quarter. So it's disheartening, but then even if they extend it to the 31st, we just hope that it was based on um, really data that really suggests that the Delta variant is the cause of the problem, and all these measures are necessary.
Now, how much of a loss revenue wise are you projecting from this 2 week ECQ? And at least, are you expecting further closures due to this one?
We already have several closures last month, and of course, this month those who were just planning to hibernate, they just gave up. They would rather close. As for revenue, the only data we have was from 2019 to 2020. Our revenues, our value dropped by 56%. We only had 68 billion last year. Now, using that as a basis, assuming everything is the same for this year, for the limited service, for the full service restaurant, you might see a drop of 2 billion pesos loss revenue. But if you include the cafe and the fast food, we might be looking at 6 billion.
Mhm. Just to give us a better picture, how many closures did you experience over the past month, like what you just mentioned earlier?
In the last state of closures, you see tenants just saying, "Okay, we'll do delivery." Curiously, this time, if when I go around checking out the shopping centers, the malls, they would rather hibernate. They don't even want to bother doing delivery business because uh, people can't go into the shopping centers anyway. So it's a guaranteed loss for them. So they'd rather hold on to as little of the cash that they have left and hope that they can still do some business after the lockdown. So we're hoping really that the public operates will stay at this stage. And let's take this Delta variant seriously because everyone needs to recover and save our fourth quarter and Christmas season.
Now, lastly, Sir Eric, before we let you go, how many of your workers will have to be let go, and what strategies are in place to at least help them to keep their jobs during the period?
Personally, I'm not going to let go of anyone. We have delivery, so our kitchen staff will be there. Our dining staff, we would like to reassign as delivery people if we can. But there are also people who would rather not work, who would rather stay home and be with their families. So we're just hoping that they will still come back after this ECQ period.
All right. Thank you very much again for your time. Really hoping for the best for the sector, despite, of course, the situation that we're in. Again, Eric Teng, President of RestoPH. Thank you, sir.
Thank you.
And those are the biggest stories this trading day, August 3, 2021. Catch Business World Live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos, and we are One News. Mask on, wash hands, and stay safe, Philippines.